Hey team, many of you have asked me kind of what I do on a kitchen table presentation, and have asked me to kind of go through the new kitchen table presentation slides. Now, just to be clear, I'm going to teach you how I do it. This is not how you have to do it. This is just really what I do. And there's going to be some things you pick up that you think, yeah, I love how Steve says that, and other things you might phrase differently and so on. So really this is just a guide to kind of help you get started and know what to say. And of course, over time, you're going to develop it and make it your own. Okay, so obviously we've sat down with the family, we've gone through the goals and dreams and so on. And now we're going on to the presentation. And important that you know your presentation introduction script before you go through this stuff, because that sets everything up for you. Okay, so here we go. So our company is called Genistar. Now what we do is, our mission is to teach people how money works and show them how to become debt-free and financially independent. So would you agree that's a good mission, Mr. Client? Do you think it's a mission that's needed in the UK, Mrs. Client? Yeah. Now, we are authorized and regulated by the Financial Conduct Authority and the Ministry of Justice, and we only offer products from partner companies in the areas of mortgages, life and serious illness, home and contents, commercial insurance, wills and trusts, and investments and property investments. We give education, so we don't advise you. That's not what we do. There's no fee for using our service. We just get paid a commission when we refer you to one of our partners that we introduce you to. We are covered by, we are regulated by the FCA, as I said, and you're also covered by the Financial Services Compensation Scheme should you decide to take any of those products or services. And of course, you're protected by a very robust complaints process. As we're regulated, it's a legal requirement that I give you this little leaflet here. This is called an initial disclosure document. We call it Where Your Family Matters, and we recommend that you read this. Also, you may get an email from our customer services team just asking a few questions, just simple questions, and one of them will be, did you get one of this? So now, of course, you can say yes to that question, can't you, right? Great. Who looks after the important documents in the household, Mrs. Client? Great, that's you. I recommend you read that. Okay. Now, there are a lot of problems facing families in the UK today. One of these problems is in debt, and you can see there's a bunch of statistics here. For example, the average household debts in the UK is around 40% of their household income. The problem is that debt can be an obstacle that prevents people from achieving their goals. It's a big problem. Another problem is people have what we call hidden money. And hidden money is where you've been missold things like payment protection insurance, package bank accounts, and so on. And the problem is that many people don't even realize that they have been missold, or they've even got money that can be claimed back. So one of the things we suggest is you have a look through your paperwork, and if you want to bring it out and let me have a look when I come back, more than happy to see if you have got any money that we might be able to make a claim for you. Another area is that wills and trusts. Now, people don't have a will. In fact, 70% of people in the UK actually don't have a will. Most people don't even know what a trust is and how much benefit it is to their family. So, do you have do you have children that might depend on you, or do you have any idea what might happen to you or happen to your family if you die? What would happen to your estate and things like that? So it's a very important thing that many people don't have covered. So it's another great area. One of the other key things is that people have a problem understanding protection. There's lots of different types of protection out there that are available, and most people kind of get sold or missold when they buy their mortgage or pop in the bank, or whatever. And the problem is people don't really know what they should or shouldn't have. And so because all protection is not the same, what we're able to do is empower people with knowledge of how to work things out for themselves. So it's really important to know what you've got and why you've got it. There's nothing worse than finding out you haven't got the protection you need when it's too late, Now, if you don't deal with all these different areas, there's a consequence of that, and there's some statistics to show you where you end up. This is a survey that was done to find out where people stand when they reach 65 or 67 in this country. Of 100 people reaching retirement age, one of them is wealthy, 4 are financially independent, 41 are still working, and 54 are dead broke. So 95% of people get to get retirement age in this country, and they're either still working or dead broke. So Mrs. Client, where would you like to be when you reach retirement? The top two, right? It's funny, when I ask that question, nobody ever says the bottom two. But if you don't change some of the things, if you don't do the things necessary, then statistics tell you where you will end up, okay? This is why financial education is very, very important. Now, Genistar is expanding. We know the need for financial education is really great. And we're expanding all over the UK right now. And we're looking for people that would like to help families or make a secondary income. Typically, somebody working part-time with us can make between £500 and £1,500 per month, working around 6 to 8 hours a week. And you may have some people that you think, well, I'd like to help them to make more money. You may know people that need more money. And so typically people like teachers, salespeople, people that are in the care sector, people that like helping people tend to do very, very well with us. So as I go through this, as I said before, you may think of one or two people that come to mind that you think, yeah, that you could see them doing this, or you'd like to help them, by connecting them to us and perhaps giving them an opportunity to find out if maybe we're the right kind of thing for them. I've got this sheet here, which is what we call a STEAM sheet, and really it's just so that as we go through the presentation, if you think of anybody, then feel free to just kind of jot their name down on there, because if you're like me, sometimes things pop in your head and pop out again, so we don't want you to forget them. So just put that and we'll come back to that afterwards. Is that okay? So for example, you might think of who's the most enthusiastic person you know. That might be a good person to put down. Now, we're very different as a company. In fact, I'd go as far as to say we're unique in the industry. We don't give advice. Everything we do is about educating you with knowledge so that you're fully equipped to make smarter financial decisions for yourself. It's not about telling you what to do, but it's about teaching you how to. Okay? We're all about just helping families. In fact, what we like to say is we give you a PhD, which is something we call proper honest direction. Okay? So how do we help families? Well, one of the things we do is we help people how to do what we call beating the banks. So this is one particular example. This is a family, and if you look here, they've got £20,000 of personal debt. They're paying about just under £400 every single month to service that debt. Their end date on that is about 2038, so it's quite a long time away. And just by understanding the principles we teach, and in this case, this couple came to work with us, they earned a little bit extra per month. They didn't do too much, but just a bit extra, helped one or two clients in a month. They were able to apply the strategies we teach and pay this debt off actually about 19 years earlier than their original kind of plan. And they saved over £58,000 of interest. So can you see why many of our clients end up coming to work with us? They're in the same sort of situation. Another way we help banks, and again, it's a good idea to cover this up. Another way we help banks is we teach them some principles. This is something called the Rule of 72. Now, have you ever heard of the Rule of 72 before? No, well, I hadn't heard of it either. And the Rule of 72 is an old banking principle, and it shows you how long it takes money to double at a certain interest rate. So let's use this example. Let's say you've got £10,000 and you put it into the bank and you're able to get 3%. Now, right now, you're not going to get 3%, of course. In fact, if you're getting 1% in the banks right now, you're lucky, okay? Let's say you get 3% though. The way this works is if you divide 72 by the interest rate, that tells you the number of years it would take to double your money. So for your 10,000 to become 20,000. So 3 into 72 goes 24 times. So that tells you at 3%, it takes 24 years to double your money. Now I can see you're not very impressed by that, okay? But don't worry, because in 24 more years, it doubles again. After 48 years, your 10,000 has grown to 40,000. I know that's also not impressive, is it? Let's assume then that you could double the interest rate, so you can get 6%. Now I'd assume if you double the interest rate, you'll double the return, right? That's logical, isn't it? Double the interest, double the money, makes sense. But actually money doesn't work like that. Remember, we teach people how money works. So the same principle, 6 into 72 goes 12 times. So that means that the doubling periods are now every 12 years. So in fact, it doesn't actually actually double it quadruples. So your 10,000 grows to 160,000. That's a little bit better. So you can see why you might need higher rates of return. Now let's look at a scenario. You take your £10,000, you put it in the bank and they give you 3%, if you're lucky. They take the 10,000, they move it to their lending division or their investment division, and they invest it at 12, 13, 14% or higher into the global economy. Or they lend it out on loans or credit cards, 20, 25%, or maybe those payday loan companies at 4,000%. Let's assume that they don't get 4,000% or even 25%. Let's assume they only get 12%. So 12 into 72 goes 6 times. So you can see now the doubling periods are every 6 years. Does that make sense? How much money do you think the banks are going to get over the same period of time? It quadrupled there, so would you think it would quadruple again? You would think that, right? But actually money doesn't work like that. In fact, every 6 years it doubles. So if I just bring this down, you can see that actually over the same period of time, they actually get £2.56 million on your 10,000, but they're kind enough to give you 40,000 and a free pen. Now I know those freebies cost a lot of money. Now do you think that's fair? Can you see now why you need to get the rule of 72 working for you rather than working for the banks? It makes sense, doesn't it? Now, I know that right now you want to know how to beat the banks, and right now you probably feel like beating the bank with a big stick. Well, that's not how you beat the bank. The way you beat the bank is by getting things like that hidden money, paying them less interest on things like loans and mortgages, cutting them out when it comes to investing so you keep more of the money for yourself, and so on. And these are the kind of things that we will teach you. Does that make sense? Great. Another way we can help families is this. This is a family that they've got a mortgage of £137,000. They're paying about £867 a month, and they've got about 20 years left to pay on this mortgage. They also have personal debt of around £20,000, and they're paying about just under £700 a month, okay, on loans and credit cards. So altogether, they're paying about £1,565 every single month. Can you see that? Yeah? Now, how would we help a family like this? Well, the first step to becoming debt-free is a very simple one, but it's not necessarily easy, and it's this: spend less money than you earn. I know, simple, right, but not always easy. So how do we help this family? Well, in this case, what we did is we said, let's take that £20,000 and consolidate it into a brand new loan, okay, a brand new mortgage of £157,000, and you'll notice that we've added 5 years onto the term, okay? Now what that's done is it's meant that it's freed up about £692 a month in their monthly budget. Now, what do most people do when they free up money? Well, they go and spend more money. In fact, I'm sure you've seen the adverts on TV when it says things like, consolidate all your monthly payments into one easy payment, and with the money you free up, it says, have a holiday, buy a new car, right? But actually, what that's saying is, free up money so you can get into more debt. So consolidation is not wrong. In fact, it's good, but it's about what you do with the money that's freed up that's important. Does that make sense? So let's do something smart with the money that they freed up. Okay? Now, this family's 35 years old, say. They in this example, we said, well, let's take £329 and overpay the mortgage. Now this mortgage that was 25 years, including all the debt, remember, is paid off in 15 years. Okay? Take the remaining £363 and invest it, and even at 8%, and we can show you places where you can access that. After 15 years, not only are they completely debt-free, but they actually have about £116,000 in their investment account after 15 years. Now, if they're 35 years old, in 15 years, how old are they going to be? 50, right? So they've still got about 17 years before retirement age, assuming it hasn't gone up by then, of course. So what we say is don't stop there. You're used to spending over £1,500 a month on debt, and now in this case, debt and investments. So you're not used to spending it on other things, so you're not going to miss it. So don't stop just doing that now. Keep adding to that money with that £1,500 and investing, and by the time they reach retirement age, they have about £1 million in their retirement fund. They're financially independent. Can you see how a small change can make a massive impact? The same £1,500 one way, never out of debt. Using it a different way, financially independent and debt-free. Does that make sense? Can you see why this knowledge is important? That's right. Other ways we help families, and again, there's many, many ways, I'm just sharing a few of them with you, is how to accelerate and pay off their mortgage quicker. So, for example, again, when I come back, I'm going to show you this in a little bit more detail, but basically, paying your mortgage one way, paid off in say 25 years. If you apply something called a fortnightly or a weekly payment option, then actually it can pay it off between 3 and 5 years earlier and save a lot of interest. As I said, I'll explain that in more detail when I come back. The good news is, Mr. Client, is you're going to earn a fortune in your lifetime. If you earn an average of £25,000 a year for 40 years, you've made around £1 million. You're a millionaire. How does it feel? Of course, that's if you don't spend any of it, right? See, it's not what you earn, it's what you do with that money. So would you agree, it's not what you earn, it's what you keep that counts? Now, your family's biggest asset really is you. In fact, there's an example here. If you had a goose that laid golden eggs, would you protect the goose or the eggs? Obviously, it's the goose, right? The goose is you, the breadwinner, and that could be both of you, it could be both geese. Your eggs are the possessions, but it's the breadwinner that pays for those possessions. It's the income earner that pays for those things. So of course it makes more sense to protect the goose than the eggs. Now this is my favorite slide, and this is called How Life Really Works. And this blue line here is life cover or protection for your family. The green line here is money. Now while you're over this side, you've got young children, high debt, mortgage, big responsibility, and very little security, because one thing we know is children and houses cost a lot of money. God forbid somebody which would become seriously ill or pass away, the loss of income here would be devastating, wouldn't it? So can you see that it's at this point in your life that you need protection? That's right. But it's not enough just to protect, because what happens is later on in life they say, I'm really sorry, Mr. Client, you're a little bit too old now, or you're a bit too much of a risk, so we can't protect you anymore. Or perhaps you just become so expensive because of age that you can't afford it. So protection is essential, but at the same time, you need to be investing and creating wealth, okay? So later on in life, you can't have protection, but it doesn't matter because you've got money, you're self-protected. Does that make sense? So we call that renting wealth while you accumulate wealth. I love this quote. It's actually from a book that I may be leaving behind for you. It's a phenomenal world-class book that we tend to leave for some of our clients. And it says in this book, you don't buy life insurance because you're going to die, but because those you love are going to live. Some people kind of get it the other way around, so I just think that's a really great quote. Now the problem is, as I said earlier, that most people don't really understand what life cover is available, what it does, how much they should have, etc. And all life cover is not the same. So when I come back, I'm going to explain a little bit more in detail about this stuff and really drill down into kind of what's relevant. But just to give you a little overview, so for example, Mr. Client, you're an employee, right? So you might have something called a death in service policy. A death in service policy is something called a daily renewable policy. And there's nothing wrong with that. It's fine to have it, and it's better to have it than not have it. But just understand what it is, that it's a policy that's renewed by your company. It only is in force if you actually continue to work there. So if you get made redundant, if you decide to leave, you're no longer protected. The problem with that is you may be protected by your company, but in 5 years you decide to leave, and or they decide that you leave, you've got no protection anymore. And what if in that time period you've become uninsurable because, God forbid, you've got some kind of medical condition that stops you being insured? It means you're uninsurable. And so it's very important to protect your family yourself. You take that responsibility. and anything that your employer does, kind of treat that as just a bonus, you know. And again, there's a few other different things there to we can go through. There are different kinds of things called serious illness, critical illness, and policies like that. So for example, most companies have something called a standard critical illness policy, and that covers anywhere from 30 to 40, sometimes maybe even up to 50 most severe critical illnesses. Other companies, you know, such as Vitality, they actually will cover over 170 serious illnesses, including, you know, most if not all of these. So it's kind of important to know what's covered and what's not covered and so on. And again, when I come back, I'll show you exactly what I mean by that. There's lots of other options you can have as well. So for example, something called indexation is really good. It's something that will increase your policy in line with inflation so that you know, it's the right amount of money. So for example, you've got £100,000 cover now, 10 years from now, £100,000 won't be worth the same because of inflation. So all that does is it increases your premium slightly and your cover amount every year so that you still have the same amount. And again, I'll kind of explain how that works in more details next time. There's also some other great programs to kind of reward you for healthy living and so on. You know, imagine if life cover was free, everybody would have it, wouldn't they? So imagine you could find a company that would actually reward you while you were still alive instead of just when you died. A company that would actually save you money in certain areas so you could afford to protect your family. Do you think that would be quite a good company to deal with? Yeah? Well, again, when I come back, I'll explain a bit more about that, how that can actually work for you. Now, Genistar has all these different partners that we deal with. We work with Vitality Life. I'm sure you've seen them on the TV, the pink one with a little dog. They're a phenomenal company, and we're actually one of their top partners. They've got some cutting edge things that nobody else has, and again, I'll explain that to you more when I see you again. We have a buildings and contents company that 9 times out of 10 they'll save people money on what they're already spending. General Insurance, wills and trusts, we have a program to help people to get those wills in place because it's relatively inexpensive. In fact, did you know you can have a will from £20 a month? Oh, sorry, not a month, £20. So it really is quite inexpensive, but people don't understand. We've got pension planning, investments, property investment, claims management, debt solutions, and actually we have mortgages too. Okay. Now the great thing about all of these things is they're all mission focused rather than commission focused. Yes, we earn money from these things, but actually it's about saving you money. And the way we look at it is this: if we can save you £20 a month here, that's money we can use somewhere else to help you in another area. So it's not about necessarily increasing people's budget, it's about helping them to use their money in a smarter way, a little bit like the example we talked about earlier. A small change can make a big impact. Now, just touching on mortgages, you know, we actually have our own mortgage company. And the reason we do that is because what we found when we tried partnering with mortgage companies is that they are focused on selling mortgages. And you might think, well, that's what we want. But actually for us, it's about looking at their mortgage with a more holistic view. How does it fit into their financial game plan? How does it fit into their plan? You know, is consolidation something that they should consider, as in the example? So our mortgage company, they're a phenomenal company. They do some amazing things, but they give an education on mortgages too. They also have a comprehensive panel of lenders, and everything is very personalized, and they look at your financial game plan and try and make sure that everything works together ultimately to help you achieve your financial goals. So it's not just about selling a product, and that's the reason why we started our own mortgage company. I'm sure you've heard this saying before: most people don't plan to fail, they fail to plan. The problem is with the industry, they sell loads of financial products. Some are good, some are bad, some are missold, some are just really expensive. In fact, if you go to your bank is a retailer. In fact, it's called a retail bank. And we know that retail doesn't give you the best price, right? So what we do in Genistar is a very different way of doing things. We do something called a financial game plan. And it's kind of like a sat-nav for your finances. And I'm going to show you an example of one of these in a minute. Basically what it does, it shows you how to get from where you are now to where you want to be financially. And it looks at various things like accelerating and paying off debt, how to get your goals and dreams by factoring in inflation and how to get to retirement and those kind of things. Okay, so let me ask you this. On a scale of 1 to 10, if 10 is the highest, how would you rate your desire to become debt-free and financially independent? 10. Well, that's a great answer, and that's what most people say. Do you actually have a written plan right now to become debt-free and financially independent? No? Well, that's also okay, because most people have the same answer. Okay? Now, what I want to do is I want to show you an example of a financial game plan. This is actually one of my clients. I've changed their names for obvious reasons. So when I come back, I'm going to bring you one of these that's specifically tailored to you. And it kind of shows you how to build a financial house. So we show you how to cover these various areas that we've discussed and how to make smart changes. We show things like where you are right now. So in this example, this family, they were spending about 40% of their income on debt. And so what I said to them is, what would your life look like if instead of saying debt payments 40%, it's or £2,000, it said disposable income £2,000, and they of course said better. The point of this plan is to show you how to get to that point as quickly as possible. And again, I won't go through the whole thing. We show you things like your net worth, how to retire, how to get your goals and dreams factoring in inflation, and how to become debt-free. So for example, in this example, this client's debt freedom date was 2040, including their mortgage. And just by applying some simple principles, their new debt freedom date came down to 2029, 11 years sooner, and they actually saved £88,000 in interest that they're not going to pay. So do you think that they were happy that I went to see them? Absolutely. And again, we'll put your plan together so it shows you kind of similar things, hopefully. So I'll just pop that back in there. Great. Now, this plan here, before I move on, if we're going to save them £88,000 and we're going to charge them money for doing this, how much do you think would be a fair price to charge for a plan that saves somebody £88,000? 5,000, 5%, 10%? Okay. Well, so if it's like £1,000, it'd be a bargain, wouldn't it? Okay. So would you agree then that this is a valuable tool for people on their financial journey? Yes. Great. Well, you know what? We believe in treating customers fairly. There are no fees or charges for that financial game plan. But it's not free. It takes time, it takes effort, it takes the fuel and the expense of traveling, come here and home again. So we actually ask for your help. We ask that if I'm going to work for you and help you, would you agree that you could help me too? Would that be fair enough? Great. Now we ask for two things. Number one, when I return and show you a plan which is better for you in every way, and you are to be the sole judge of that. It's not what I think, it's what you think that counts. Would there be any reason why we can't do business? And all that really means is that if you decided that you would like to implement anything that the plan highlighted, all we ask is you do that through us and our partner companies that basically we vetted for you so we know that they're good companies. Is that fair enough? That's great. Now we only have one request for participation in our program. That is if you're happy with what we do, that you recommend us to 10 families just like you who you feel would benefit from seeing the same thing. Of course, they can decide whether they see us or not, that's up to them, but all we ask is that you recommend us. Is that fair enough? That's great. And so guys, so that's kind of where I finished. Great. And then I'll move straight on to the filling out the fact find. Great, and then I'll close my folder and say, okay, so in order to put your plan together, I just need to gather a few bits of information from you. And then I'll go back typically to the goals and dreams. So you mentioned about these goals and dreams and and then of course, date of birth and all those kind of things as you go through, and that's another lesson. Hopefully that was useful to you. Now, just to finalize this, once you've gone through the fact find, at the bottom of the fact find, it talks about if they want to work with us, it's inviting them to the meeting, okay? So this is a slide you can kind of open up when you get to that point. So while they're doing the fact find, you're filling it out, you can open this slide up on the kitchen table, and you can either read this or you can read the bottom of the fact find. So you might, you finish that, they've signed it, everything's done. You say, okay, now a large number of people need the kind of support that Genistar offers, and we need people to help them. If we could help you become financially independent through helping others, would you be interested in learning more about our business? And then normally they're going to say yes. Another way of saying it is on the fact find is, obviously a large number of people need the kind of help that Genistar offers. If you could earn an extra £1,000 or £2,000 a month towards your goals by helping others, is that something you'd have an interest in finding out more about? Or so on. There's other ways you can say it, but that gives you a little insight. And again, if you want to, there's other slides here. So if people want success stories about PPI claims, you've got some examples there. I don't tend to use these. I don't think I've ever used them actually. It's a lot of writing, and really I find people are more concerned about their own success story than others. And this is an example of what people could make by earning people. So it just gives an example of what you could help if you did that. I find honestly though, as much as that's a nice slide, I find that just using the figures of 500 to 1,500 a month by helping, a client a week or something, it tells them enough, it tempts them enough without going into real great detail. They can find out commission structures when we do an RP with them or an interview or whatever. So hopefully that was useful. I'm sure we'll do one of these again, but it just gives you a little insight into how to do this. And there is also going to be a script for this, which is going to be similar to what I just said, but perhaps a little bit different. And you're welcome to learn that, practice it, and of course, as I said at the beginning, make it your own. Okay? Have an awesome week and go and do some scoops. Take care. Bye.